Hi, and welcome to FANG Friday. This is Ross Healy, the Chairman of Strategic Analysis Corporation and the Portfolio Manager at McNichol & Associates Asset Management. A couple of things today. As always, remember to like this video, and if you haven't done so already, you can subscribe to our YouTube channel to make sure that you get these videos every Friday as we publish them. By the way, I would love to see if we could get to 100 likes on this video today. If so, then I may have a surprise for you next week. Second, if you've been watching FANG Friday with us for over a year and wonder how our valuation system would work with your investments, why don't you take that next step and send us an email outlining where you are on your investment journey. Anyway, to business. Every now and then we get a clear indication as to why structural valuation analysis, our approach to investing, is so useful, and right now this is one of them. The FANGs are faced with a Congress which is hell-bent on doing something about them, although what that is remains almost completely unknown. At the same time as the economics of the FANGs are implacably in their favor. So what does one do in the face of two diametrically opposed points of view? Well, what we do is we listen to SVA, of course. To remind our recent subscribers to what SVA is, it is the merger of fundamental and technical analysis. Now, the technical analysts sneer at the fundamentalists and say loudly that technical analysis tells you to ignore the fundamentals because the market knows all. But the fundamental analysis tells us what the values are. And it is therefore very nice when you can read both of them from the same chart. It's not that the FANG stocks are cheap, but they do possess strong growth characteristics. They have strong balance sheets, and they have good price momentum. However, you need to know if this is enough to keep the prices up in the stratosphere, and that's where our SVA breakpoints come into play. They are the market's signaling mechanism, and over time, as those of you who have been with us for the last 15 months have seen, those technical values have kept you on the straight and narrow in FANG after FANG. Now, the big question facing Congress is, how do you control these companies? It's kind of like whack-a-mole. One issue pops up after another. But the problem with dealing with disruptors, which is what these companies are, is in whose interest is it to stop the disruption? Congress complains about the lack of competition and the abuse of power. But that's not the problem as I see it. There is too much competition for more traditional companies to withstand. Anyway, let's go and turn to the FANGs and see what happened in the past week. Well, the first thing that happened is Amazon came in with some really spectacular numbers, and the stock has been very strong today. Note that the stock has been kind of riding its HB4 price, having broken out solidly, and I would definitely say that this stock points higher. We've already seen in a past video that the HB5 is a distinct possibility for this company, so we are very much inclined to stay with this stock right now. Facebook had beautiful numbers, didn't they? And the stock also has been kind of testing its MSG price. That's 5.5 times book value. And it has tested it very successfully, and again, it's acting very, very strongly today. Its peak has been its bubble price at 7.4 times book value a little while ago. Could well get there again. Apple, well, again, Apple had beautiful numbers. And by the way, this is an interesting chart because Apple broke out over its HB3. That's 20 times its book value. And then was riding, and then it had, look at that, it had a very, very quick test. And that's very, very common. Technical analysts say the stock will break out and it pulls back to support. Well, that's exactly what Apple has done, and it's now moving on its way. Beautiful numbers, and the stock looks to be very much to me as if it's heading higher. NVIDIA, well, NVIDIA is going to be reporting, I think it's scheduled for next week. That's always, of course, subject to revision, but nonetheless, that stock has broken out solidly and looks also to me as if it's heading higher. And its HB4 price, which is almost $490, is very much within reach on its own recent history. Alphabet, well, what can we say about their numbers? Compared to Amazon and Facebook and Apple, they were distinctly weak. And of course, you can see here, the fair market value has been sliding lower. And therefore, with weak numbers, the stock has been pulling back towards its low super growth price. That's 4.5 times book value. We will be watching very carefully to see what happens there. And by the way, let's go and take a look at the longer-term picture of this stock. And what you see for the past 10 years is that when this company has broken out over its LSG price, it has exhibited no ability to get to the next breakpoint, its MSG price, which is 5.5 times book. And it could well be that it's happening again. So we'll have to watch this stock very carefully at its low super growth price, its LSG price. That's $14.50. The stock is, I think, was $14.68 the last time I took a look at it a few minutes ago. So we'll want to be watching the stock very carefully. Netflix, it's kind of almost a kind of a bête noire, eh? Netflix came right up to its HB4 price, and then it just frustrated the dickens out of all of us because it just would not break out, and it tried and tried and tried, and then finally it did, only to pull right back down again to the HB4, and it's sitting just a little bit underneath that price. Now, remember when we were watching the stock here before that little breakout, we were also watching another stock, Disney, for evidence, a kind of canary in the coal mine kind of evidence that if one could break out, maybe it would pull the other higher. And here was Disney at the time, right at its growth price, that's 2 times book value, and it broke out in May. Whereas Netflix waited until June. So our canary was singing happily, and it did pull Netflix out. But recently, Disney hasn't been able to get anywhere, and of course, its fair market value has been plunging. And again, I kind of wonder if this does remain a harbinger for Netflix as well. We shall be watching Netflix very carefully. Finally, Microsoft. Well, Microsoft, they had decent numbers, but they certainly didn't excite the market very much. The stock has come up hard against its HB2 price. That's 12 times its book value, and that, of course, was the old high, which it set back earlier this year, and so far the stock has been unable to break out. I'm afraid we would have to leave that in the sell column. Anyway, in conclusion, all except Microsoft have had confirmed breakouts. However, we are a little bit concerned about Netflix and a little bit concerned about Alphabet as well, because Alphabet has to hold here. To me, the overall market still does not seem to want to go down, and in my books, the FANGs are my canaries in the coal mine. So far, they are still singing a bullish song overall. I would suggest to you to make sure that you follow FANG Friday in the period ahead. However, as Buffett said, remember, price is what you pay and value is what you get, and value is running very thin. But I think that the market, the S&P, has a good chance of reaching its super growth price, which is 3.5 times the adjusted book value before it gives up the ghost. As for our clients tuning in, remember that we will keep updating these numbers during our weekly webinar, so make sure that you attend them or watch them afterwards on our client website. Anyway, if what you have seen has interested you and you want to take the next step in your investing journey, as so many have, by the way, over the past few months, send us an email at info@strategicanalysis.ca. Our clients do get a lot of benefits, not just access to our 3,000 charts of North American stocks, but daily commentary, trade ideas, weekly webinars where we go into the nitty-gritty details of how to use our charts in order to become a better investor. When you sign up, I will personally take you through our system in a one-on-one video conference and show you how you can use it to become a more confident and profitable investor. If this sounds like something that's in line with your goals, then take the next step. For now, this has been Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates, reminding you that nothing, including investing, is difficult if you have the right tools. I'll see you next week.